Welcome, everybody. Hope you're having a good Monday. Hope you had an amazing Independence Day weekend. I know day and weekend don't match, but whatever. It was amazing for me. Soccer everywhere, football, the red card reversal. US plays today. We got Alex with us with Accruity. I'm ready to learn. The topic of this one, I wish we would do more of these, Alex, which is not just educational, but it's really core for us as agents, teams, brokerages, because it hits us right where it matters. Like, I want to keep most of my money if I can, legally, obviously, right? And
Yes.
I don't know where to start because this isn't my world typically. And most agents, we come in from working somewhere else, not finance typically, right? We did human resources, we were servers, we did something other than accounting, a CPA or financial advisor.
Yep.
So, first, Alex, let us know who you are, where
Yeah.
you work, how does this all work, and let's get into it.
Perfect. Yeah. Excited to be here. I'll give you guys a little background about me. My name's Alex. I'm out of Pittsburgh, PA. We were just chatting a little bit about the rainy weather we got here today. But I'm one of our partners at Steel Point Capital, which is a firm that we have that we're really focused on the real estate space. We own multiple businesses, all focused on some level of real estate. The one we'll be talking about today is Accruity, which is a real estate focused finance, accounting, and CPA firm. Been in the industry about 15 years now. Cool thing, me, I'm a new dad. I've got a 4.5-month-old baby here at home, so that's her and our dog and my wife there. And then of course all the social media. So if anybody wants to give us a follow, all our information is there. But like Tristan said, that's what we're here to do today. Just be as value driven as possible. Everything will be well within the tax laws, all above board. No, TikTok tax hacks that you see out there get in trouble. So we're going to talk through all of that here today.
All right, Alex, I'm ready to go, man. I'm just writing down your TikTok handle so I can follow you later.
Yeah, perfect.
Alex.m.oros.
Yep, exactly.
And I got you. All right, where do we start?
Yeah, so typically, this is what we hear from our clients. I get a call from my CPA around the spring, and they're going to tell me, "Hey, send me all your docs. I'll get you filed, and then I'm going to call you again next spring, and we'll just go through that process. If you had a good year, you're probably going to owe some money, and you're going to write a nice check to the government, and that tends to be the cycle, right? There's not a lot of strategy, there's not a lot of planning, there's not a
True.
very proactive approach to that. So that's what we're here at Accruity to do, is to really shift that mindset. We don't want to be that historian that is just working through the numbers of last year. We really want to be focusing more on the strategy side. And that's planning before things happen. That's really making sure, we're all working on the same page to understand, what can we do to limit as much tax liability as possible, and then proactively again work against that. So you're not waiting till December all of a sudden to say, all right, where are my write-offs? Or, hey, I got to go through my books now. The key is to have ongoing strategy within there.
Okay, I
So
like that.
a lot of people ask, what are those strategies? And to give some background too on the type of people that Accruity here we're working with, it is largely agents, investors, property managers, flippers, wholesalers, because there's a ton within the real estate portion of the tax laws that you want to make sure you know and can take advantage of. So we'll run through some of those here today and walk through really a 5-step strategy model that we want to implement for all our clients. We want you guys to be able to at least go have that conversation, if it's not with us, with your CPA, of why or how am I doing these types of things. So the framework that we typically like to work on, we use a nice round number here for this example with an agent just making $100,000 a year. That's within GCI there, or it could be within other verticals within the real estate space. You might also do some flips on the side. You might have a rental property or two, but really want to use that as a nice clean round number. And then you can kind of pinpoint from there, hey, I'm way above that number, but then maybe double, triple the numbers that we'll talk about today. 100,000 just tends to make it, nice, simple.
Easy.
So this case here, let's say you're at 125,000 right off the jump, you owe about $13,000 in federal taxes. That's just going to be the standard across the board there. If you can implement the framework that we'll walk through today, you can get that federal tax liability down to zero. I'm sure everybody would love to keep an extra 13 grand in their pocket. And then think about what you can do that within your business. Is that more marketing spend? Is that acquiring that flip or rental property you want? Hiring another agent, hiring some type of admin resource that you need. There's so much you can do with that $13,000. When we look at general tax liability on that same person, you're probably going to owe still about 22,000 there without any type of strategy. But again, if you can go through this framework, this is now where you can start to pay a lot of that through quarterlies. You can get as much of that done through your payroll taxes. And the biggest key here is you're not just blindsided in April with a big tax bill and then chunking away at the profits you have, and maybe you didn't save properly, maybe you weren't ready for that. Now all of a sudden it eats away at the business. So working
Mm,
framework, we're going to get that number down as much as we possibly can.
makes sense. I like this.
It's 5 steps. Again, reduce your framework, stay proactive on it. And if you can go through this one coordinated system, you'll be able to knock that tax bill down. So here are those 5 steps. First, you got to be structured properly with your entities. We often see this, you're just not structurally sound to one, limit liability, but also then to be able to pay yourself properly, which gets us into number 2, which is the wage optimization, really understanding your salary, how you pay yourself, how you can take different bonuses or deductions, and then what entity you pay yourself out of. That's really critical in tax savings. Maximize your retirement contributions. This is how you start to build longer term wealth. We always encourage our clients to try to use some of that to invest in real estate. And we can talk through a little bit about that as well
Yeah.
here. But once you've got that real estate side now, you want to start to do all the right depreciation tactics that you can. Make sure you're classified as a real estate professional. You can run cost segregations on your property. Make sure you're maximizing the bonus depreciation from the one big beautiful bill. And then lastly, we'll talk through just some of the low-hanging fruit strategies. These are ones that all business owners, all entrepreneurs should be implementing, right away.
Can you keep that one really quick? I'm going to snapshot that. Let me
Sure.
go to my computer here. I'm gonna grab. I'm gonna post it up in Lab Code Agents really quick as you're going through. All right, I got it. Perfect.
Perfect. All right, so let's start with the first one here, and we're going to use this example. So it's that agent. They make 125,000 GCI. They are married. They have 2 kids. That's very important for tax side when we talk about getting your kids on payroll, utilizing your real estate professional status. That can help to offset your partner's income as well. They've also got here no S-Corp elected on this. So we want to now implement that 5-step framework. Get your federal tax down to 0. Find about $20,000 in additional tax savings. Park some of that in long-term wealth. Again, your retirements into real estate. And then if you can follow that model there, we typically try to get our clients to follow the Burr model when they start to invest. You get it now an asset. That asset appreciates over time. That potentially can, increase your generational wealth there. We'll use that as an example here too. But this is how you keep a ton of money in your pocket, but also build it for the long term.
I like that, man. That's a cool slide too. Are you going to send these slides after to everybody, or how does this work?
Yeah, we can share these. We can share this whole deck with everyone.
Okay, cool.
So first thing right away, we want you got to be able to set up your business to run through an S-Corp. A lot of our clients set up an LLC. That's great. We'll walk through general framework there, but you've got to make sure you have an S-Corp holding those individual LLCs. In this case here now, we can actually pay yourself out of the S-Corp, which is more taxable, more favorable tax range. Typically, again, depending on states, you can get probably down to like a 30 to a 15 to 16% payroll tax by simply structuring your business the right way and paying yourself through the S-Corp. In this example here, we're going to set a reasonable salary. You can pay yourself about $48,000 there. You can still take bonuses and distributions to get yourself to that $125,000. So your take-home pay is still the same, but you're limiting payroll tax on that side. And then you also want to make sure you're electing to do qualified business income, QBI, really critical as well. That way you can select all the items that you would need to as valid business expenses. Right away from there, you're going to save about $6,500 right on taxes. And that's before you've actually done anything different. This is all within your current business today. It's just restructuring and rechanging the way that you're organized. We get that question a lot, well, hey, am I big enough for an S Corp? Typically once you hit that 80 to 100K in profit mark, an S Corp is going to make a lot of sense. If you're below that, there is going to be admin cost. You got to set the entity up. You've got to do your annual filings. You're going to have multiple tax returns then. So it's really
Mhm.
cost benefit analysis at that point. But if you're above that 80 to 100, S Corp is going to be able to save on ton on taxes. Anything below that, it might be a little bit too burdensome from an admin cost standpoint. If
Got it.
you're well above that 100K mark, you got to have your S Corp in place then. And this is a really good one too of how do you actually want to structure a real estate business.
Mm.
Because, like we mentioned earlier, a lot of our clients do have the side businesses where they've got a rental property or they flip. They do some of those additional income streams. You need each of
Mhm.
those income streams in their own entity, and that's how you protect yourself from a liability standpoint. If you flip houses, you have renters; those can be very litigious. Someone gets hurt doing a flip, that's a contractor. You have a tenant dispute and it goes to court, you don't want that impacting any of your other business operations, like your agency or like other real estate assets you might have. So you start to segregate those out, properties in their own entities, flipping as its own entities, then your retail real estate side as its own entity. A holding company can sit above all that. This is now how you can start to get really good overarching business data around generally your whole enterprise. And then the S Corp sits on top of that. And that's essentially where you pay yourself out of. The S Corp owns and manages all the different businesses that you have. A
This
lot
is
of our
cool,
clients,
dude.
sorry, question there.
This is really cool, man. I like this.
Going to protect you from a liability side, but also maximize everything you can from a tax savings perspective. And then a lot of our clients will sit with a trust at top of that. So if you want to, leave your business to your families, you can put the trust on top there just to make that super smooth.
So I got a question on this for real estate agents as a whole. When we're looking at this, are we looking at creating the S corp first, typically, or are we going to create the trust or personal holdings first?
The trust one is always optional, so you don't necessarily always need that. Again, if you want to just leave things, for family down the line. So some of our clients do that, just more continuity planning. But basically, the bottom three there are the ones you're really going to want: entity for your real estate side, entity for your agents, and they can run in parallel, sitting with the holding company on top, and then the S corp will own all of that. So it's not uncommon for our clients if you've got multiple properties you own that you might have at that very bottom tier, 4, 5, 6 entities on that side. We
Mhm.
typically encourage our clients when your portfolio entities have more than $1 million worth of value in them,
Yeah.
create your next one. Because much like we talked about the S
Got
corp,
it.
there's admin costs with all of that. So you want to start to segregate out a little bit of your property assets as well, just so you're not holding them all in their own individual entity.
Alex, with this, do you guys help so we don't have to go to like all these we go to an attorney for this and they're going to be the ones that outsource it and then we go to a CPA or
Yeah,
you guys
great
do this
question.
all for us?
Yes, we can do all of your business entities. Typically, if you want to get into a trust, that's where we would recommend using a lawyer, and then typically somebody local. That way, anything happens, they can be
Yeah,
there. You're
that's very true
on,
on the local one.
wide. Exactly. But yeah, in terms of entity creations like LLCs, S corps, we can create all those for you.
Perfect, and then you guys obviously give us the advice on how to optimize them because of your experience, right?
Exactly. Yep.
Sure.
Yep.
All right, continue, sorry. Those are
Right.
my
No, great.
questions.
Yeah, no, those are great. And usually they're the questions we get. So happy to jump in on any of those. So now you're structured properly. We know how the business should be operating. Now we want to start to think about the way that you can put money into the long term. So
Okay.
typically like our clients to do some type of self-directed 401k. We've also got partners that can help create those as well. And then that's going to be your main retirement vehicle. You can then
Mm,
start to basically take that into, like, instead of paying it, this is always a really good example because people say, "Well, I've got to put $28,000 in my IRA now or my 401k." But if you just pay yourself that $28,000, you're going to pay taxes on that and probably owe about an additional $20,000 worth of taxes for that year. So the
damn.
idea here is let's park that money away for the long term. Let's do that tax free versus taking that through your paycheck right away and then paying the tax side on there. What's really cool about that is if you're working with like a self-directed retirement vehicle, you can use that to go and purchase real estate. And now we'll start to get into how you can build longer term wealth within additional assets, creating passive income with the rental property, but now being able to do some of the bonus depreciation and the cost seg on it. So take that 28K, put it into your self-directed. We're going to use that self-directed to go purchase properties. Just a couple rule of thumbs on the retirements for the solo 401k. Max contribution this year is 72,000. If you do a SEP IRA, you can do up to 25% of your general commissions. So that's a really good discussion we typically have with our clients. So we're not putting too much or too little in there. We want to make sure we're maximizing out that number.
That's awesome.
Now we've got that property. This is a real example here again that we helped with a client on. So we found them a property for $245,000. And again, when I say find them, they're the ones out there looking for it. They find it in their market. Your agents, so you guys know, hey, this is going to be a great rental, but we're going to help you with the numbers on the back end of being able to write that deal so we can get the right amount of depreciation off of that. So in this case, we knew about 245K would be that mark. They went and purchased that property. We helped with the cost segregation on there. We applied bonus depreciation to that, which essentially means you can just pull all that depreciation up into year one. That really also helps you, offset some of the cost of buying the property today because you get all that extra depreciation. So we had about $119,000 worth of depreciation from the cost seg on this that now they could put down as write-offs, for the current tax year. What gets really cool about this one, if you're a real estate professional, which agents will qualify for, that will also then work to help offset, your husband's or wife's W-2 income. So in this example here, husband was an agent, wife had a high performing W-2 job. We're using that 119K of depreciation to also offset some of her wife's income as well that she was making on the W-2 side. So really, really critical that you guys can make sure you have that conversation with your CPA to make sure you're checking that box that you're a real estate professional, because it often gets overlooked if your CPA just doesn't know about that. And then you're not going to be able to help offset active and passive losses for both you and your partner.
Dude, since you work with a lot of real estate agents, do you guys have like a checklist you go through? I'm assuming you do.
Yeah,
Real estate agent, here are your options. Let's go through them. Are you in a position to take advantage of any of these?
exactly. Yep. Yeah, we'll do that. And we always meet with our clients quarterly just on the whole tax side. And here's basically what you need to make sure you're tracking to prove your real estate professional status. 50% of your service hours must be in real estate. You've got to get to the 750 hours a year in that activity. And again, our agent clients, this is super easy for them. You can think about, all your prospecting, CRM management, all your listings, trainings, all of those types of things count towards those hours. So that 750 is, super obtainable. We've probably got, people on this call that get that in a quarter. So other activities that count as well, property management is probably our number two that we see. But a lot of our people who have massive real estate portfolios, and then they're owning and operating all of the activity that goes on there from a property management side, flipping, wholesaling, all of those counts. The key here is just make sure you have some type of mechanism to really track your hours. Outlook calendars make that super easy, or Google calendars. You put all your meetings in there, you put all your showings in there, all your training times, and it's very easy to prove then. But again, from the agent perspective, I'm sure everybody on this call is going to be able to check that box there.
Yeah, that one's fairly easy.
Fairly easy. Yep, for sure. Yep. So make sure you're classifying that. We often get this question, what is a cost seg study? So typically when you own an asset, you can depreciate that over 27 and a half years. If you do a cost seg, you can actually break those down into shorter, faster asset lives. So closer about the 5 to 7 year mark. So you can take advantage of the depreciation earlier in the cycle versus just one 1/27th over the course of the asset life. Once they launch the one big beautiful bill, you can actually now get the 100% of bonus depreciation in year one. So as you can see there, for like the personal properties, for all the upgrades, for the land improvements, now you pull that forward into year one, massive tax savings. And this is where our clients will get into a cycle of rinse and repeating this process. You buy one property per year, you start to grow this massive portfolio, it creates passive income. You're creating this bank of depreciation year after year after year by cost segging one of those properties. Our portfolio come to here, it's through Steel Point Capital. In 6 years, we did that 900 times. Got about 900 doors by following that exact model. So very doable to be able to bring that federal tax liability down there. And I jumped ahead a little bit on this one, but once one big beautiful bill kicked in January of 2025, that allowed you to be able to take that all within the first year. You got to make sure that that property is active on active rental. So you want to get speed to deliver to get that onto the market. And once that's on there, then you can start to activate your bonus depreciation.
That's awesome.
Yeah, it's a really good one. And again, very rinse and repeatable. And you likely are finding a house for a client of yours that is doing that strategy. It's one of the things we always see with our agent clients. You're helping investors find the properties. So it's just kind of shifting your focus to say, I've got to be the investor in this as well, because you know the market, you know which ones are going to be good rent your areas, etc.
Dude, Alex, on just on that one big beautiful bill, allowing us to be able to do that, that in itself is a session as a real estate agent that we could run in
Sure.
person, where we can bring in 5 people that are wondering, or a webinar for
Yep,
our database. That's
for sure.
I don't know how to run it, so I'd be like, Alex, can you run this
Yeah.
with me?
Yes,
That's
definitely.
how I
Yeah.
would do it.
And same thing with that Burr model strategy. I mean, we do something like that. We've done Burr model webinars to teach you how to do that full Burr model, because that's how you can really rinse, repeat, and scale acquiring a portfolio, super quick.
Yeah, I like that. That makes a lot of sense. A couple of questions before you continue.
Sure.
Susan, what's up, Susan? Can you start an S-Corp in the middle of the year?
Yeah. Yep, that's fine. Again, just work with someone on the strategy portion of that. So you've got really clean dates on those types of things. And if you need to work backwards, we can help with that. Always with that type of stuff, you want to have really solid bookkeeping in place. That's the foundation of all good tax planning, is that your books are accurate, you're keeping up to date with your transactions, you're not mixing business and personal expenses, because that will also make that a little bit trickier. But get some really good bookkeeping processes in place, and then that's pretty straightforward for us to help you
Do you
with.
guys also help with bookkeeping so we can outsource that to you?
Exactly. Yep.
All right,
Yep.
perfect.
I'll talk a little bit more about kind of everything we can do, but yeah, again, bookkeeping is the core of all of it. If your books are bad, it makes tax planning very difficult, tax filing very difficult, strategy very difficult, because we don't know your numbers. So you got to have really good P&Ls, balance sheets, forecast. That's how we can start to say, we think you're going to owe X this year. So go find that $245,000 property, because that's the number we've got to try to get to, be able to pull the tax liability down. We don't want you to go buy a $500,000 house that you're going to make a rental and then have either way too much depreciation that you can't utilize all of, or you don't find one in that right range and then you don't get enough and then you still get hit with the tax liability.
2 more questions before you go. Danielle, what's up, Danielle? Well, 3 more questions. Another one just came through. Hold on.
Yeah.
If we already have an S-Corp for our business and a personal trust, are you saying that an S-Corp should be held in the trust?
Trust can own the S-Corp, correct.
Yep, perfect. That's how we do it, Danielle. I agree with that.
Yeah.
That's the best way. Julie, and this is very specific to Connecticut, Alex, so I don't know. Maybe this is a question to you directly later. S-Corp in Connecticut is only allowed for a broker, not a licensed real estate agent, I believe. I'm not sure, she's saying.
Yeah, good question. I don't know that one off the top of my head, but yeah, maybe Julie, if you want to shoot me an email, we can talk offline about that one. I just want to do a little research, just because I know some of the states do have some different regulations. So,
All right, and then last question before you continue here. Stacy, what do you recommend for bookkeeping? QuickBooks with the projects for flipping has gotten so pricey, and doing it for multiple companies.
yeah.
Thanks.
Yeah, QuickBooks is what most of our clients do. My recommendation, whether you're working with us or any other, bookkeeper out there, make sure you own the instance of QuickBooks, because it's your data. So we see that every once in a while with, hey, well, the bookkeeper owns my QuickBooks instance. If you leave that bookkeeper, they've got your data. So make sure it's your license for QuickBooks. It's just going to help with data security. QuickBooks Online is still probably the best one. They're putting out a lot of good features on there. If you've got QuickBooks Desktop, they're actually sunsetting that at the end of the year. So they're starting to convert clients over. So just try to make sure you're on the latest version there. Some use like NetSuite. We've got some clients on the property management side that use like AppFolio or Buildium, and those tend to be okay as well. But typically, if you're an agent with some type of portfolio, QuickBooks is going to be the best one. And you can create classes in QuickBooks for the properties. So you can do it all in one instance. Then you don't need to have multiple QuickBooks instances.
All right, dude. Good answer. All right, keep going. This is
Cool.
good.
All right, these are going to be the easy ones that, regardless, everybody today should start to do these. Make sure you have an accountable plan. That's what you can run business expenses, things like mileage and meals, laptops, cell phones. If you travel for conferences or do masterminds, coaching, run those all through your business. You want to
Hmm.
do that through your accountable plan, so that can be done, pre-tax. Then run the Augusta Rule. This one's really cool. You can basically rent your personal home to your business for up to 14 days a year. In this example, that was about a $600 a day fee for this client. You can do that tax free. You've got to document that you're actually doing the meetings, but you can do, team building activities. You can do holiday parties. You can do annual, quarterly plannings.
So you
All
could do like quarterly past client events at your house that are hosted by like these food trucks, and then
Yeah,
that's all. Okay, that's
exactly.
awesome.
Yep. Find fair market value for rentals in your area to document it, and it's got to be within there. You can't say, "Hey, my house is $1 million a day," but again, in this example here was about a $600 a day rate, so that's perfect. You
That'd
can
be
do that
crazy.
for 14 days a year. So again, get some really good scheduling in there, and it's going to be those things you're probably already doing. Have a team building day at your house. Again, if you do any type of annual or quarterly plannings, do them in your home. You might already be doing in your home and just not taking advantage of it. So document it, find fair market value, and then actually create the transaction. Your S-Corp has to pay you then individually or personally for that, and that's going to be done tax free. Um, this was critical in our example. They had 2 kids. You want to be able to get your kids on the payroll. You can do that for about 15K a year tax free. Have a job description. You got to prove that they actually can do the work. But really nowadays, with so much marketing material, ads and Facebook and Instagram, you can make your kids models, essentially use their name and likeness.
Yeah.
You often see that with agents. Maybe you're driving through your neighborhood, there's a for sale sign, and they've got their kids on the sign with them as well. They're likely paying them then to use that image, and then that can be tax free. What we also like to recommend to our clients is you can actually pay your kid into a self-directed vehicle, and then you can get your kids into your real estate deals. So you're creating longer term generational wealth for them as well. And that can also help just with generally some of the cost of acquiring the properties. So something else to think about. We can see that with 529, college funds as well. You can pay them directly into there. But those are all really good ways you can strategize for your kids and get that done tax free. So in this example here, that's about another total of $4,000 worth of tax savings
That's
for
pretty
the year.
good.
We did this one, the breakdown here of the Augusta Rule and what that is. So just make sure you're taking advantage of that. But when we start to think about how we can put all of those together, our entity structuring, wage optimization, 6,500, retirement contributions, 2,500, bonus depreciation, that's going to get us 5,000. The low hanging fruits, that gets us another 4,000. You start to stack these all on top of each other, layering in the bank of depreciation we have from the cost seg, and that's how you really start to get that tax liability down. We like to use this as a coordinated system. That way you're really starting to project out and can get creative on how and when to, do things like the cost segs and get very strategic on it. But that's basically the 5 things you really got to start to get out there and implement. Um, Here's just kind of a little background on Accruity and some of the service we offer. We've been very focused today just around the tax side, but we're end-to-end full back office. So we can
Mm.
do your entity optimizations. We can do your full tax strategy and tax filings. We can run your full back office for you. So that is like the QuickBooks and the bookkeeping and the transactional documentation. We really want to focus too on reporting. So that's things like P&Ls, balance sheets, KPIs. The
Mm.
KPIs so critical. And because we're working in the real estate space, we know the measurements that like agents should be utilizing. Things like customer acquisition costs, lifetime value of your agents, lifetime values of your customers. These are all things you want to be able to start to track so you can get creative on, do I go spend more on marketing? Does that billboard on the side of the road bring in more leads than my Facebook ads? You got to have really good reporting to be able to do all of that. And so that's kind of that fractional CFO world as well. But when you put all 4 of those elements together, that's how you've got a fully best in class back office, and then really can get creative. You can make really good data driven decisions on your business. You're going to find savings, you're going to be strategic, and you're not going to overpay in taxes when you build all those together.
Okay, a couple of questions.
Yep.
Well, a few. Number one, fractional CEO. Is that something you guys offer for brokerages as well? How does that work?
Yeah, so that's all that reporting package area there, and probably that term fractional CFO is maybe overused. A lot of people probably don't need a full fractional CFO. You need a really good like senior manager, controller, and you need good data. And so when you're able to produce the reports and have those conversations with someone that we produce through again the P&Ls, balance sheets, KPIs, then you can sit down with somebody on a monthly basis and review those. But oftentimes that again, that phrase, someone thinks, well, I don't need a CFO. I run a 5-person team. You might not again need that CFO, but you need the reporting and the analysis piece of it.
Got it. Next question. When we're looking at just the bookkeeping or maybe the CPA piece as an individual agent, is this something that also allows us to talk to somebody consistently throughout the year? How does that work?
For sure. Yeah. We meet with all of our clients on at least a monthly basis. So when we close your books, we deliver you those reports that we talked about, and we sit down with you and basically say, all right, Tristan, here's what went well this month. Here's an opportunity. Here's where we're seeing something maybe not going so well. We want to have those conversations with you. We do all the bookkeeping on a weekly basis. That way, you're just never lingering too far to like, okay, I got to catch up for my books this whole quarter. We're not going to produce the right reports that you would need then almost in real time. So we do all of that on a weekly basis, close the books at the end of the month, deliver that to our clients, ideally within the first 10 business days of the following month. And then we have that meeting with you. And then we do tax planning on a quarterly basis. And typically on the agent side, there's a lot of ebbs and flows throughout the quarter. July, you might sell more houses than ever, but August, it slows down. So you probably don't need the full tax side month over month, but we want to look at a quarterly basis. That's where we can start to see, great, we did hit the numbers we needed to this full quarter, and we still got plenty of time to adjust strategies we need to. A lot of our clients hit seasonality as well. Talking to an agent recently, they're in like Minnesota, and they're like,
Yeah.
sometimes when I got to sell my houses, because once December hits, nobody's moving. So we can always adjust the cadence, kind of based off the seasonality and the cycles that the client's in.
All right. What's the onboarding process look like for somebody who's getting like maybe a lower tier of what you offer, which is just bookkeeping? How do you guys set all that up with them?
Exactly. Yeah, great question. We do a 30-day project with all of our clients where we actually get in there and build your systems. So we will get completeness and accuracy to your books,
Damn.
remodel your QuickBooks as you need to. We'll help with the entity structuring. That way, if we've got to go and create an S-Corp or divide out your entities, we'll do all that for you. And then we create the first pass of your reporting package so we can give you the data to make decisions off of. We can slice and dice that too. I mean, not everybody needs all of those at one time, but we want to spend the first 30 days building that for you. That way,
Mhm.
when we want to get into that advisor type role, we know that it's all done in the right way. The models make sense for the verticals you're in. You've got accuracy. You've got the right reports you need. For us to be successful in advisory, we've got to make sure the systems all operate. So we do that in the first 30 days. Then we move into a monthly retainer model.
Dude, I love that. Nice, man. And there's different pricing depending on where you're at. Is that
Of
what?
course. Yep. Yeah, exactly. Some of our clients, all they need is just bookkeeping. Some of them, they need end-to-end everything. Just depends on where they're at. And then, of course, we do tax filings as well. So at the end of the year, we'll file taxes.
Okay, going back to the S-Score, Amy's got a question. 100K profit is gross profit or after deduction for S-Core?
That would be gross. Yeah, run that at the gross level. Yep.
Awesome. And then going back to all of the different things that you guys do you also run this for bigger brokerages as they're scaling? And this is a separate question,
Yeah.
is there revenue share or an opportunity for the broker to make money depending on how that works?
Yes, really good question. And we have that where maybe you're part of a team. And so we run the full ops of the team. And then we also do individual agent work. And then we always give like a referral fee essentially to the team lead on there. So it's not uncommon that we run the whole brokerage and maybe we do tax planning for like 3 or 4 agents on their team. And those agents might also have, a flipping business on the side that's
Mm.
not related at all to the teamwork, but we're kind of keeping it all in house there. So yep, we do a whole referral program as well. That's how we find most of our business because agents love to tell their friends, hey, I just saved $50,000 in taxes this year, and you should be too. So most of our business does come from referrals.
Okay, I like that, man. What's the product that typically most or a lot of agents go to you guys for? Is it the bookkeeping, the CPA, the filing for
Yeah,
creating an S-Corp? What does that look like?
tax strategy is the biggest one. Yep.
Tax
Because
strategies.
tax strategy, exactly. So
What does that include?
that's basically that 5 pillars that we talked through in this example, us
Got
building,
it.
maintaining, and advising on that for our clients. Again, just because we know the real estate ins and outs that CPA down the street just might not know. And again, typically on the agent side, depending on maturity of the brokerage or if they're just an individual agent, some of them like to do the bookkeeping work themselves, and that's totally fine. Others,
Mm.
as you get bigger, you're like, I don't want to be in the QuickBooks all day. So we have a mix on there, but vast majority of our clients are going to have tax planning to some degree because that's where we can find you the most savings.
What do you find? And this isn't against agents because we all know agents suck at finances for the most part. Okay, guys. And I've been in real estate for 22 years, and there's very few that like got it all together. So it's okay. Um, what do you find is the number one challenge when you're helping just any agent that's calling up and saying, "Hey, I don't know where to start. I don't have anything set up." What's the number one thing?
In the agent world, it's usually that they're mixing business and personal charges. There's just not set
Oh,
up.
yeah.
I run all my expenses out of my business or my personal, and it's easy to do. You're at Starbucks and you just grab that card, but you got to start to separate those out.
Mm.
And it's because they're doing a lot of those things like the meals, like the company car, all of that type of stuff that you might do with personal as well. So that's what we really will spend a lot of that time doing is like go create a business bank account, a business credit card. Don't put any of your personal stuff on there. Run it all through the business. That's also a red
Dude,
flag for audits. So
you know what we could do on our next one, which would be really helpful for people, agents tuning in, because then it also can give them the ability to see the power of what you guys do.
yeah, yeah,
If you had it on one slide where you started with the trust and you went to the S-Corp, then you went to, I forgot the other 2
yeah. The holding companies there.
holding
Yep.
companies, yeah. If you could, simplify it for a single agent, so it'd say, "Hey, look, you start with the S-Corp, and this is how you should distribute your money. It goes
Yep.
to the business account, it goes to this." If we could do a session with little circles like that,
Yeah, yeah,
that would freaking be insane for us, because
yeah.
I didn't see that until, like, I was, like, year 8 in this business. I'm like, "Where was this? Like, why didn't somebody tell me year 1?"
Yeah,
Right?
and that's that whole entity optimization side where we say structure this way, bank account here, and they're separate.
Yes,
You do
that's
that.
what I want.
Yep.
Let's
Yeah.
do that, dude. Like,
Perfect.
circle it out and be like, "I want that package, Alex. That's what I want. Do that for me."
Yep. And I think there was to the point someone mentioned about the flipping, the transactions on flips, because there's a ton. So if you start to put my personal and my agent and
Dude, yes.
there, it's all a mess. You got to have separate accounts. And then you start to automate some of those bank flows from QuickBooks, and they can just start to hit the classes of each of those entities. So,
Yeah, my little circle would be like the IRA, right?
yep,
And then it'd show how it's building up, and then that would then have probably, as I grow, a trust, another trust, depending on dude, that would be so fun to do.
let's do it.
I
Yeah,
love that. All right, let's do that on the second one, everyone. Please
yeah.
scan that QR code. If you have any questions for Alex, that's how you get a hold of him. If you can't scan it, because I know some of you can't, how do we get a hold of you? What email do we use?
You can use alex@accruity.com. I'm also in the Lab Coat Facebook group. So we're posting some stuff on there too. So you can always reach out to me on there. I'll make sure we post this whole presentation in the Facebook group as well. And then, yeah, you can reach out. My email, phone, all that stuff's on the contact there.
All right, I just put up the link to your email, and I also just followed you on Instagram.
Perfect.
Perfect. There it is. Got you. And I'll put up the Instagram one. And then I'm going to put up that slide. Unless you think from the slide I had, which was that one with the 5, with the breakdown, with the entity structure, wage optimization, retirement, bonus, and low hanging fruit.
Yeah,
Unless you think I should post a different one. I thought that one was pretty good.
pretty good. Yeah, yeah. And I'll make sure the whole deck gets out there. I can work with the team to make sure it's emailed out. So
Awesome. Alex, this was awesome, buddy. I need
yeah, no,
more of this. Like, this
Yes.
is the type of stuff we all need. So
Yeah.
thank you for
Yeah.
doing this.
Happy to be here. If you guys need anything else, please reach out.